I used to charge $398 for this exact information that I'm going to be sharing with you in this video for completely free. This is the exact strategy that I have been using for last 7 years, and it has made me well over $300,000 in just last few years of trading. With this exact strategy, I decided that there is no need for me to charge you any money. If you really want to learn how to become profitable, I guarantee this is the video that's gonna turn you into a highly profitable trader if you watch it until the end. In this video, we are gonna be focusing on 6 different things, starting from understanding market zones, how you can know when to buy, when to sell, what is a pullback, how does it work, the market structure that you need inside the pullback, reversal patterns, as well as trade confirmations with the help of using correlation, and a special market structure that you will learn in this video. You can find the timestamps so that way it will be easier for you to go through all the techniques one by one. So just before we deep dive into the video, I have added my free Discord community link as well in the description, which I just very recently started. Every single week, twice a week, I will be coming on live to share with you the analysis that what I'm looking for in the market. We will be doing bunch of free live webinars, and I will be in the community 24/7 to help you become a profitable trader for completely free. So now let's deep dive into today's video. It's gonna be a very special one. Do not forget to watch it until the end. Leave a like and share this with your friends who want to become a profitable trader. As I said earlier on, that we will be focusing on 6 different things, starting from understanding the market zones. You have to understand before you even do your analysis to take your trade. You need to know when you are in buyer zone and when you are in seller zone. That means if the market is giving you certain type of conditions, whether you're going to be taking buy or sell. We will start with that. Then we're going to move on to using 2 different time frames to confirm the market zones or market territories. That's for the confirmation, because we always are required to use 2 time frames, confirm whether are we going to be interested in taking the buy or taking the sell. Then we're going to be talking about pullbacks, because we always recommend that you should never trade without a pullback. Fourth is going to be what kind of a momentum and structure we need inside the pullback. Then we will talk about once pullback will finish, then what is the structure, the reversal patterns that we need in order to start taking our interest in taking the trade, as well as some confirmations before we take the trade, before we execute. What are the confirmations we need? One of them is going to be a specific market condition or the market structure. Then the second is going to be using correlation and the strength numbers of a currency, which I will show you later on, that how you can make your own strength meter. So these are the total 6 things, and all of them are dependent on each other. You cannot understand higher time frames for confirmation without first understanding market zones. You cannot understand the momentum and structure without first understanding market zones, higher time frames, and never trading without pullbacks or simply pullbacks. So you have to go step by step in order to develop this strategy. One thing that I'm gonna mention here, that if you think that after watching this video for only one time you're gonna master it, then I will tell you mastery comes from doing the same thing over and over again. You have to go through the video over and over again. And I guarantee if you do that and if you learn the concepts that I'm going to be sharing, backtest them, I guarantee you will start to have positive results in your trading. That's the exact same strategy that I have been teaching since 2021. But now I have decided that I'm going to be sharing with every single one of you for completely free. Now let's start with the first concept, understanding market zones. Now always understand market, it simply just does not go up or go down. It always goes in this movement. Market goes up, then it pullbacks, then it goes up, then it pullbacks, then it goes up, then it pullbacks. We call this higher high and higher low pattern. Now you know that when market is breaking the previous market structure, it is creating a higher high, and when it is pulling back and making a kind of support before it continues the direction, we call that part higher low. So in our structure, when we have the structure like this, that's higher high, that's higher low, that's higher high, and that's higher low. Now we will only know if market will actually make a move to the up. Then and only then we can say, yeah, that was our higher low. And it goes same for the sell side. Market always move in this pattern. It goes to create a lower low, pulls back, makes a lower high, then breaks the previous lower low to create a new lower low. Then it does the same, lower high, lower low, lower high, lower low. market always move in higher high and higher low, or lower low and lower high sequence. When it is not moving in lower low, lower high, or higher high, higher low, that means market is going to be staying in a range. It is going to be consolidating. Then there will be no higher high or higher low. Always it will be a choppy movement. That means market will simply be just turning into this type of structure. There will be no proper direction for the upside as well as for the downside. That's for us is a range or a consolidation movement. We always must avoid trading inside the consolidation movement or trading the ranges. Now, there is definitely a way that we can trade ranges using this strategy, but that's going to be very advanced and I don't want to confuse you for now. Alright, so now let's go back. Now we know that market always moves in a higher high, high low, or lower low, lower high sequence. Now the important point is that you need to understand how you will know market is actually in the higher high, high low sequence now, because sometimes you look at the market and you will see that it is just making lower low, lower high sequence, but that may not be the case. The reason, overall trend is what you should be looking for. Overall market can be in a buyer zone or in the buyers or uptrend, but the recent movement that you're seeing can be for the sell. So we are always going to be focusing on the overall trend. Now what we need always, that let's say market is making a movement like this, that is the recent movement. We're going to be looking at examples of course, but just for the understanding, market is making a movement like this, and there was a point when market ended up breaking this strong resistance which kept resisting the market to go down and down and down. You see here that market first resisted here, then market resisted here, then market resisted here. There were 3 times when market resisted almost at the same level. Now we are only going to be considering ourselves, or like we are only going to be considering market to be in the buyers when there's going to be a strong break of market structure. That means the resistance that kept resisting the market to go down again and again, buyers, they're gonna come up with a lot of momentum. They're gonna break that area and they're gonna go and create a higher high. It's same for the sell side. If there is a support level that market has been getting a support from over and over and over again, and then sellers come and create a strong movement to the downside, makes a lower low, that means they just broke this level of support which kept supporting the market to stay above that area. Once we break this strong support level and we have a lot of momentum in the seller's movement, that means that market is officially now in the seller's zone. Now here I am on gold 15-minute chart. What you see, that market, it is making a move to the upside, and from this level, yes, there were resistance of course, but they are very small. Like there was this type of a structure. However, you see that once market created this higher high, when it was creating higher high, high low, higher high, high low, when it created this higher high, it could not create a higher high. Instead, it got resisted from this higher high area, made it a resistance, and then sellers, they started to go down. Same happened here. Here we can say right now it is a lower high because we just broke this previous high low right here, ended up creating this lower low, then market made a lower high, then kind of made a very miniature level of lower low, then lower high, then it started to consolidate in this area. Now what you see right here is a strong resistance level. Market resisted 1 time, market resisted 2nd time, market resisted 3rd time, market resisted 4th time before it broke it. Or the overall higher high area right here is going to be exactly here, because this was the price from where we got a resistance. Then market tried going above it, however it failed and it came down. And if we just look back, you can see that was a strong resistance level. And even this movement that happened right here, market did try to break that resistance area, however it came back. We only broke it when we saw this big buyers movement, and that's the actual movement that we should be looking for. So we had this resistance right here. I'm going to clear it all, and when market broke it, it ended up going up, creating a higher high. Now when it created a higher high, we know that yes, overall we are now in the buyer's territory or in the buyer zone. Now I was saying to you, remember that there can be a recent movement that when market is making lower low, lower high sequence, market is making lower low and lower high, then lower low, then lower high. However, it can be an illusion. Overall, we are still inside the buyer's market. Why we are still inside the buyer's market? Because we broke this level, we created a higher high. Now there is one very important point from where buyers movement started to happen, which actually ended up breaking this strong resistance. Now pause it for a second, think about it, from where the movement started. If you are gonna say this was the area from where the movement started, but we never really broke the resistance. This movement, because we started from here, we went towards this area, we never really broke the resistance. Then now think about it again, from where the movement of the buyer started, which broke key resistance level. It actually started from this price level. This is the area from where the movement of buyers it started, and it was coming up with a lot of strength, and because of that there was a strong movement to the upside which broke the resistance. So as long as we are above the area from where the buyers started their movement, we can call it a responsible guy, the responsible market area from where buyers movement started. As long as we are staying above it, we are inside the buyer zone. That's one point. The next point is, as long as we are staying below this higher high, market is below this higher high, and we are playing in this zone, we are playing between higher high area and we are playing above the responsible guy area, is the area we are gonna call it like we are in the buyer zone. When market will break it, this responsible area, the responsible price level from where the buyers movement started, when we will break it to the downside, that means officially market has now turned into sellers. Or if we break this higher high area, that means we are no longer in this buyer zone. Instead, there is a new break of market structure. The key resistance from where all of this pullback happened, market broke it to the upside, and we are now in the area, the new buyer zone. We broke it and we ended up creating this level of higher high. So that means we are inside the new buyer zone. As we are inside the new buyer zone, that means the responsible price level has now changed as well. Now where would you say the responsible price level is? Here, if you are saying this is the area which is responsible for creating the strong movement to the upside, then you are wrong, because we went towards here, then there were couple of rejections when market could not break this strong resistance. After where this pullback happened, we could not break it. So the actual movement, it started right here. When this bearish candle ended and the next bullish candle came, market started to pick up a lot of strength. We ended up breaking the high of the previous higher high or the resistance, and we created a new higher high. That means that is the responsible area. Now the market has now moved from the previous market buyer zone. We are now in the new market's buyer zone. That means as long as we are playing between this responsible area and the higher high, we are inside the buyer zone. And that was the break of market structure. So by now we are only looking at understanding market zones. This may be confusing for you, but if it is making sense, that's perfectly fine. However, if you are finding it difficult to understand, then I want you to go back again to watch this chapter, this part of the video, understanding market zones, because it is very crucial. Whatever I'm going to be teaching you next in the video, it's not going to make any sense, because it's going to be all dependent on understanding market zones. Now remember, the second chapter, the second part of the video was understanding or using higher time frames for confirmation. Now we are on 15-minute time frame. I talked about that we always will use two different time frames, and these two different time frames will be used to confirm whether we are in buyers or we are in sellers. Now I told you that here you see that market is making a seller's movement. So if you just look at this part of the market, you are seeing market has been going down from this price level. It is creating lower high sequence. However, if you just scroll it out, zoom it out, you will see overall we are inside the buyers. This is the big buyers movement that happened before this last sellers movement, and that is the reason why buyers, they took control and they ended up making a higher high, because overall we are still in the buyers momentum, the buyers movement. Now how to confirm that? Because many times you will end up confusing yourself, that you will find this pullback, which we will talk about later on, and we will talk about it in detail that what kind of a pullback you need. You will see this movement, which is actually a pullback, and you will be thinking, oh, market is making lower low and lower high. That means whenever there will be a pullback, I'm gonna be taking a sell. You will be waiting for miniature level of pullbacks. However, these players who are waiting right here at the break of market structure, they know that it's going to be a strong movement to the upside as we are overall making high highs and high lows. That's why we need to use 2 time frame. Now, why we need to use 2 time frames? Let's just say there is a strong resistance that market has been unable to break for a very long time, and once it breaks it, it looks like this. We are saying, yeah, we have this resistance and we just got broken. We have our responsible price level from where the movement started to happen for the buyers, and when buyers created a higher high. That's on the 15-minute time frame. Now you are seeing all of this on 15-minute time frame. All right, but if you will look it on 1 hour time frame, then it's gonna look something like this. There will be a resistance and there will be this movement. So all of this that you see right here, this strong resistance, it will be only this much data on 1 hour time frame. Now, if 1 hour and 15-minute time frame both recently have this strong movement to the upside while breaking the resistance area, that means then and only then we are in the buyers. That means, which indicates that the pullback or the movement that you're going to be seeing, which is going to be a recent movement, if you will be looking at it, it's only going to be a small pullback on 1 hour time frame. That means 1 hour will still be telling you buy. However, 15-minute will be telling you no, you are in seller zone. You are making lower lows and lower highs. You are making lower lows and lower highs. Spot is becoming resistance. Keep selling. But these players, they will be like, so pullback is happening and we are coming to test the area from where break of market structure happened. When we are coming to test it, they're going to be taking a bias position. That's how big money works. That's how big players, they use higher time frames. They don't like to trade on 1 minute time frame. When they go in, they go big. And when they go big, they buy from higher time frames because they want to hold their trades for a very, very long term. That's why it is very important that you use always your higher time frame. Now, if you're using 5 minutes to execute the trades, then your higher time frame is going to be 15 minutes. If you are using 15 minutes to execute the trade, then your higher time frame is going to be 1 hour. If you are using 1 hour as your trading time frame, then your higher time frame is going to be 4 hours. And if you are using 4 hours as your trading time frame, then your higher time frame is going to be the daily time frame. Now, I like to trade on the 15-minute time frame, and I always use 1 hour as my higher time frame. Now, if I will show you this exact market on the 1 hour, it's gonna look like this. You see that all the movement from the sellers after we broke a strong resistance, it is just a pullback on 1 hour time frame. That means what I just told you, that the resistance which got broken right here, it is still there. We have our higher high right here, and the movement which happened from the sellers, it was just a pullback. It came to retest the resistance area, and then buyers, they went up. Now, how the pullback is gonna come, how we're gonna know pullback has ended, which is very, very important, how we're gonna be finding confirmations before we enter into the trade, how correlation will come in handy, what kind of market structure we will be needing, everything is gonna be covered very soon. Now, again, I'm gonna cover it one more time for you to better understand it, that we have this strong resistance on the 15-minute time frame, which is your trading time frame. In this example, your trading time frame can be 5 minutes, then your higher time frame again will be 15 minutes. My trading time frame is 15 minutes. That means my higher time frame, which I'm using for the confirmation of finding the market zones, it is 1 hour. Here you see how many times we got rejected here. Once, then we got rejected twice, then we got rejected many times just lower that resistance area. We were rejecting again and again and again, and buyers were unable to find the strength. But when they found the strength from this price level, which is our responsible area, the responsible price area, which made a strong movement to the upside, look how strong we went. Now, this is when you scrolled out. Again, you see the movement, you will see this movement. Let's say that market is here. Now here when you are saying, all right, market is basically making a lower low and lower high sequence. It is going down. It is not making a higher high, higher low. Instead, it is going down, and we always need to sell whenever there will be a test of support, which will then turn into resistance, test of support, which will then turn into resistance, test of support, which will then turn into resistance. We need to sell. You will keep selling. But when you look at bigger picture, you go to 1 hour time frame, you will see, all right, this doesn't look good, because this is just a movement inside this big buyers movement. What if buyers they start to go up? Then this will turn into a higher low. That's why using higher time frame is very important to confirm whether we are in buyers or not, or we are in sellers or not. So that is one example. Now again, if you join free community from the link in description, my Discord community, this exact strategy I am covering it every single week, not just one time, twice, on the webinars with the community members. I have just started this free community. I am literally giving away all this information for free. I am answering all your questions for free. So what else you need? All the information that I once used to charge $398, it's completely free for every single one of you. Now that second concept, you have to come back again if you feel like you're confused. You have to come back to this section to understand how market zones work and how you can use higher time frames to confirm whether the market zone for the buyers, if you are thinking if it is a buy, is it correct? Or if you're thinking market is in seller zone, is it correct or not? The next thing, why you should never trade without a pullback. That's our third chapter for this video. Now, as I said earlier or at the very start of this video, that market never just moves up or moves down, or moves up or moves down. It always moves in a pattern, and market always follow the same pattern over and over and over again. Literally the exact thing that I'm sharing right now, I have been using it since 2017. So imagine same thing has been happening over and over and over again. Now, market is making a move, then it is making a move down before it goes up. Then it comes down, goes up. Now, how to understand it? Let's just say that at the time when a new iPhone came, price was, let's say, $900. Now, iPhone price is $900 and the supply is only 1,000 pieces. And out of that 1,000 pieces, 800 people have bought the iPhone. That means after 800 have bought at the price of 900, how many are left? Only 200 are left. When only 200 are left and people who want to buy, they are 500. This is the number of people who wants to buy iPhone, but in stock only 200 iPhones are available. Then what do you think is going to happen? There is going to be a price increase because now the supply is small, limited supply, and demand is a lot. That's how market actually moves. When demand is a lot, market is going to be giving you $1,100 price. Now, once market is giving you $1,100 price, now how many out of these 500 are going to buy? They're going to be like, no, it's very expensive. Probably 50 will buy. So when 50 will buy, that means 150 phones are left. However, at this point, at this price level, no one is interested in buying iPhones. That means demand is going to be very low as compared to the supply. Supply is still 150, but the demand is no one really wants to buy the iPhone anymore. Now what market is going to do? Market is going to give you discount, which is called pullback in the market structure. When you're going to be getting discounts, probably you will get a discount like here, and you will get a discount till $1,000. And now when you get a discount till $1,000, 10 people out of these 500 or more 10 people will buy. So that means now we are left with 140 iPhones. But only 10 people bought. Before that, it was 500 people who wanted to buy the iPhone and only 200 supply was available. Now, only 10 people bought when 150 iPhones were available. So market, it will decrease the price again. It will give you that $900 price. Let's say this 900 from where 800 people bought when the supply was 1,000 and more than 500 were still wanting to buy. At this point, when you are at the same price, where there was a lot of demand previously, the people, the 440 left people who haven't bought the iPhone yet and they want to buy, and the supply is 140. So what is going to happen? There is going to be a lot of demand for this much supply and price is going to go up. Price will be increased. That's how you need to start thinking when you are saying market is moving. That's how when market is basically moving, when buyers are buying and at one point the big players, they decide, all right, now the price is too high, let's take out some position. You see some sort of a movement to the down. Then when they want to invest again, they invest with billions of dollars, market starts to rise up. Then after it reaches a certain price level, they decide, all right, the price is now too high, we need to take out our positions, we need to start selling. That means they sell, price drops. That's what is called a pullback. And we always should buy after a pullback, or we always should sell after a pullback. That means we are always going to be waiting for these discounts to happen in the market if we were going to be buying or selling. Without the discounts, we are traders, we don't want to buy. Without higher price, we don't want to sell. So concept comes, buy low, sell high. However, there is a catch. When market is breaking this structure, the resistance area, let's say in case of buyers, and the pullback is coming, it should always come to the level where the break of market structure happened. We do not want it to come here if we want to buy. In our strategy, it is very, very important that we always want it to come to the level where the break of market structure happened, and then and only then we're going to be taking the buy. However, this movement, this sellers movement, or the movement that happened from the sellers, which is a pullback in our case, because we are waiting for the discount, we do not want to buy at this high level, we want to get a discount. When it is giving us discount, we want it to come to the break of market structure. When it came, we need a specific pattern, and without that pattern, we are always never gonna buy. So the pullback is coming, but let's just say that this is on the 15-minute time frame again. I trade 15 minutes. That's why I keep saying 15 minutes is my trading time frame. This is the market structure, no higher high, no higher high, no higher high. That means market keeps getting resisted again and again and again. And once we break it to the upside, we have a higher high. Now from here, yes, we know there is a strong movement. Yeah. Now the buyers are very strong, but we want sellers to come in this pattern. So sellers are going to come, and they're going to be coming in a very similar pattern that I'm showing you. And you will see this example over and over again. Like almost every day you will see this example happening in the market. After the strong buyers, we will talk about the sellers as well, so that way you can better understand it. Now in this case, the buyers, after they created a higher high, sellers are coming down. They're going to come, make a movement. Then they will go up again to test this higher high. I am calling it a test because they will try to go above it, but they will fail. When they will fail, that's where the actual pullback starts to happen, because sellers are going to make a movement. Now we are only going to be considering something a movement when it is going to break previous miniature level of market structure, a small market structure. Once it just broke this market structure, what does it mean? That means we have our first leg of a pullback. I will say it again. That means we have our first leg of a pullback. Now I just said first leg. That means there is a specific number of legs that we need in order to understand that the pullback is coming to end. Now the first leg is here, and after that, always and always there is going to be a separator. When I say separator, that means there are going to come some buyers in the market before sellers go down again. When there will be some buyers in the market, that is a separator for us. And this is a miniature level of lower low now. Ignore now all the things that happened before. We are only focusing on what is happening right now in the market, because we are waiting for the pullback to develop and to end as well. So first leg came, we're only gonna know, this is very important, we're only gonna consider a second leg of a pullback, an actual second leg of a pullback, when sellers will come and they will break the low of first leg and they will go down. Then there will be some buyers again. They can be like this as well. It does not have to be just one movement. There can be some movements of buyers. But when we want sellers to make a third leg, they will be making a movement like this. However, like there can be of course different movements. Just for the sake of example, they will be making a movement like this. But as long as we are not going below the low of second leg of a pullback, then we're not going to be considering a third leg. So let's just say this movement happened. So that was the low of first leg. That is the low of second leg. I will just point that this is the low of first leg. This is the low of second leg. Yeah, I'm going to point it. And once we are breaking it, then and only then we are considering anything a leg. This is first leg. This is second leg. And now we have our third leg. Always there are going to be minimum of 3 legs and maximum of 4 legs. Now why minimum of 3 legs and why maximum of 4 legs? This comes, I'm going to type it here. The first is always going to be a confusion. There is always going to be confusion in the market. Like if we are buying, market is making higher high and high low, then why suddenly on the 15-minute time frame, market just broke that high low, which was this structure that I told you that sellers, they need to break this structure in order for us to consider it our first leg of a pullback. That is going to create confusion. Second is going to be confirmation. So what is going to be a confirmation? So let's just say when market just broke this level, it made a first leg of a pullback and there was a separated buyers came. Most of the people, even though they were confused, they were thinking, okay, buyers did come up, which is an indication that all these big buyers who are right here, they are going to come back. However, right after this second movement from the sellers, which broke the even price of low of the previous sell movement, it broke it. It's going to make them believe that we are no longer in the buyer zone, because now we are creating lower low and lower high sequence. This is lower high right here. This is lower low right there. And then this is lower low right here. So if we are making lower low, lower high, lower low, lower high sequence, after the second leg will come, which will break the previous lower low, they're going to be having the confirmations. All right, now we are in the seller's zone because we are making lower lows, we are making lower highs. So let's keep selling now. However, they will maybe, some of them may be like hesitating. Oh, but what if these buyers, they are standing there? Then what's gonna happen? The third leg is gonna come, which is right there. And this third leg is gonna break the low of second leg. And when right after it will happen, execution part will come. People will start to sell. Now comes the point that I wanted to make. Without sellers, there can be no buyers. And without buyers, there can be no sellers. So we need to have sellers in the market if we want to buy. And we need to have buyers in the market if we want to sell. So without all of these sellers, how do you think market is going to go up? It cannot go up. That's why it moves in this pattern. It goes up, then comes down, then it makes a higher high, then it makes a higher low. That part from where on 1 hour, you're going to see this pattern like this. Let's say there will be just a higher movement, strong buyers movement, it created a higher high, then there's going to be just this one leg to the down. Now this whole movement that you are seeing, it's going to look like this whole movement on the 15-minute time frame. So for 1 hour time frame, the higher time frame, it's just going to be, a higher low sequence. Right there, they made like a higher high and then they created a higher low, and then market continued its movement to the upside. But on the trading time frame, which is our lower time frame, or we can call it a 15-minute time frame, or any trading time frame, execution time frame, all of this is happening and we need all of this. That's why it's very important to use higher time frames for confirmation, and we need this type of structure in the pullbacks before we take the trade. Now how we're going to be taking the trade is one thing which is going to come later on, but I'm going to show you some examples of the pullbacks that the way they come, many times, like majority times, you will see them over and over and over and over again, that they will come exactly like this. I will give you 2 examples, one for buy and one for sell. Alright guys, so here is the example. I have the first example for you guys, which is going to be a sell example. Now here what you see, we have strong level of support right here. Market made a lower low or a strong support, it went up. Then sellers, they tried again, they could not go down, and look at the movement that happened. They basically went up with a lot of buyers momentum, and sellers, they could not break this lower low. That means that we have strong support level right here. Then after that, we even have support right here. So market, before it basically went down and it broke these support levels, what you see right here is that there were a lot of rejections at the support level before market broke it right here, or before market broke it right here. Now I always like to prefer looking for the support which is next to the break of market structure, or which is next to the movement that happened from the sellers. Let's say in this example, that means this support level right here, it was far away from the support which is exactly right here. Now we have this strong sellers movement on the 15-minute time frame. Now on the 15-minute time frame, I told you it's gonna be a lot more data as compared to 1 hour, but we can go to 1 hour to check that is the movement that happened. You see the strong support level from where market was getting a support to go up again and again, and when sellers came, they came with a lot of strength and they broke it. That is the strong break of market structure. So we have the strong break of market structure. We're going to go back to 15-minute again, and we're going to talk about how the pullback is going to come. This is the lower low. Market is always going to start making a pullback. I showed you by example, which was just based on the structure, but as we are now seeing the live example, I started with sellers example to make you confused. Now inverse what you learned, what you saw in the buyer structure. I told you in the buyer structure that when there will be high and sellers will come, buyers will try to go above, but they will fail, and sellers, they will make a movement. That will be our first leg of the pullback. Inverse that information and now see it based on the sellers example. We have created a lower low, but right after we created a lower low, there were some buyers that came, but sellers, they tried going lower than that. However, they failed. And when buyers made a movement, we broke this structure. Now we have broken this structure. That means officially we have our first leg right here. Now we're going to type here, just for the sake of reference, that we have our first leg right here. I'm going to get rid of the lower low. We have our first. I told you in that buyer structure when I was showing you that as long as we are not going to go lower than the low of first leg, we will never consider second leg of the pullback. In this example, as we are talking about the sellers example now, as long as we are not gonna go higher than the high of first leg and actually go higher, not just one candle higher and then sellers come down, we will never consider that movement which is gonna happen the second leg of the pullback. Now if I go right, you will see so far we haven't went higher than that. Yes, all of this drama happened after the first leg was created, which is fine. We're talking about trading the big movements. All this drama we needed, all this market is not simply just gonna go make one leg, then come back, then make second leg, then come back. It's always gonna be consolidating in between those movements. We need to just stop looking at the market when market is consolidating. We don't need to care about this market data. However, when the second leg it came, which is right here, you see that it went way higher than the high of first leg. That means we have our second leg, and after that there is a separator. Of course, once we have this second leg right here, then we saw that there were a lot of sellers which came, which I told you we need separator. And now whenever we're gonna go higher than the high of second leg, then and only then we're gonna be considering that movement a third leg from the market. So let's go, and you can see definitely that buyers, they went higher than the high of second leg. That means we have now even the third leg of the market. So we have third leg from the market as a pullback. I'm gonna put the referencing. This is the second leg and this is the third leg. Now after the third leg, we are now near to the structure, like break of structure which happened. That was the lowest point in that support area, and look what market did. Market, it actually went back to the lower low. There is a big seller's opportunity right at this area with a potential of 3.48 risk to reward ratio, which I will cover later on, that how we can spot the trade opportunities. However, That is how the structure is gonna look like. Now, one thing which is very, very important is how you're gonna be knowing that after the third leg, fourth leg will not come. Remember, I told you there can be 4 legs. So basically, I'm gonna type here for you to understand. Write it down. Second leg should be bigger, should be stronger than the first leg. The third leg, it should be weaker and smaller than second leg. Alright, these are very important points. Now, how you need to measure the distance from here to here was the first leg, from here to here is the second leg, from here to here is the third leg. So let's just take them out, and when we take them out, you see, yes, the first leg was definitely very stronger in this example, but many times second leg will always be stronger. However, in this case it wasn't. That's the reason I showed you on purpose. You can also say that this was the whole second leg if you don't want to use this movement, only as a reference. Now, if you will say, then definitely second leg is bigger. However, I would prefer to use this movement as my second leg, but many times I have seen when I used to teach this exact strategy to my students, they used to count this overall movement, like from where it started and it created a second leg, it went higher than the high of first leg. They used to count it as a second leg, which is a correct way as well. So second leg now in this example is definitely higher than first leg. Now look at the third leg. That is the length of third leg. It is way smaller. That's what we need. Other than that, I told you the stronger. Here you see this big candles, these two candles, they are definitely very stronger. Yes, first leg also had strength. However, second leg seems to be more stronger. Now, when you see the third leg, look at the sizes of the candle. We're talking about gauging the momentum. We're talking about seeing how market is moving or making a movement. In this example right here, market made a movement from here to here, right? And then it went down to create a separator. Now, from where the third leg started, which was here, market is made a movement. Then there were some sellers candle. Then buyers candle came, sellers candle, buyers candle came, sellers candle, buyers candle came, sellers candle, buyers candle, then sellers took control. Look how market is moving up. It is inching its way to the upside. This is why third leg should be weaker, and this is how it will be weaker when you will understand it. So that's how you can find the structure of the pullback, the momentum of the pullback, and we also talked about why pullbacks are very important. So far we had talked about how to understand market zones, how to find whether market is going for the buy side or we're going for the sell side. Then we talked about using 2 time frames to confirm whether we are actually in the buy or we are actually in the sell. So that way there will be more confirmations for our analysis. Then we talked about why pullbacks are very important. Then we have seen what kind of pullback structure we need. I just gave you one example. Now I'm going to give you the second example, which is going to be for the buyer side. Okay, so we are on Euro USD 15-minute time frame, and the reason why I brought you up this specific example is because I wanted to show you like how market can move very fast when breaking the previous market structure, and then how pullback may never come to the break of market structure area. So you see right here that after when market was making high low sequence, we ended up making this high, and then sellers made a strong pullback. Yeah, so when sellers made a strong pullback, we have a resistance right here. We can say that this was the area from where market got resisted and sellers came down. Then buyers tried to break it, but they failed. Then there were few tries right here, which we can see that market could not break that area. It was coming near to that area, but every time when it was coming, it was failing. However, it ended up breaking. So we can say like overall, let's just say this was the resistance, or you can also see that we have a strong resistance right there. So anyone that you want to count, it's up to you. I prefer to use the recent resistance area, which is near to the break of market structure. That way, because there is a higher probability the market will come to that area. However, look at the strong movement. Look how strong buyers took a momentum from right here and they went up. There was definitely some sort of a news event which made this strong movement to the upside. Look at how big the movement is. That's why the pullback was very deep. Now we can confirm it on the 1 hour time frame that this was the market structure, the break of market structure which happened from this big buyers movement, and that was the resistance that we broke. So now we broke this resistance from here, market made a movement. This was the responsible price level, and now we have created a higher high, which is right here. When we created a higher high, there was definitely a pullback visible on the 1 hour time frame as well. However, right after the pullback ended, buyers they started to make a movement to the upside again. Now if we go to 15-minute, which is my trading time frame, what you see right here is like after the strong buyers movement, we have this higher high. Look how the market is now reacting. So I told you sellers will come, buyers will try to make a higher high, but when they will fail and sellers will make a movement which is lower than that market structure, then it means we have our first leg of the pullback. So that is our first leg of the pullback. I am now gonna type here that it is our first leg of the pullback, and after that there will be a separator, and we have a separator right here. We see right here that buyers, they made a movement to the upside. Now after, we know that yes, this is the low of the first leg of a pullback. As long as we are not gonna see a movement to the downside, so this seller's movement which tried to go lower than the low of first leg, that is not our second leg, because we never really went very low, like properly low than the low of first leg of a pullback. However, when this movement happened right here is our second leg. Now what I told you, that second leg should be very stronger as well as bigger than the first leg. If you will just look at it, you can definitely see the difference. After that, we have our third leg aspect. So I won't really count this big seller's candle that came will be my third leg, because we just came and then buyers went up. The actual third leg happened right here. Now compare the strength as well as the distance of the third leg to the second leg. Third leg is definitely weaker as compared to the second leg. And right after that, what really happened? Buyers went up. They tried going lower than the low of the third leg. They could not, and then buyers started to go up, and they ended up reaching that higher high area. Now there is definitely this trade right here, and I will tell you how to spot a trade where we could have made like 3 risk to reward ratio easily. Now I will tell you again that all these patterns that I'm showing you, they don't happen after every 10 minutes, but they do happen after every single day. They happen at least 3 to 4 times a week, and I have traded many times a week. I know that what I'm telling you, it actually works, and that is what made me over $170,000 just with the prop firms. Now the reason why pullback did not happen towards this level where the actual break of structure happened, like the area of which market actually broke when creating a strong movement to the upside to create a higher high, because look at the buyers movement. It was so massive that if sellers would have came down, all the way came down, it would have been turned into a higher time frame trade, because then all of that data will be even properly visible in terms of first leg, in terms of second leg, third leg, then rejections and everything, even on the 1 hour time frame. Then it would have been turned a 1 hour and 4 hour trade, because we are only focusing on 15 minutes. So that is why that's the pullback that we needed. It happened. We gauged the momentum of the pullback. We saw how pullback came from where sellers died and buyers took control. Then we could execute the trade. Now there is one thing that I want to tell you, that let's just say I'm going to show you right before that we have this strong resistance right here, and market broke it. So we have resisted from here, then market resisted again from here. Then when market broke it, yes, we know that we are in a strong buyer's momentum. We know that we are in the buyer's market zone. After that, sellers made a pullback, and when they made a pullback, they came towards this area from where the break of structure happened, and then buyers took control. Now look at how the pullback came. Can you really gauge the momentum? Can you really find out where is the first leg and the second leg? Yes, you may say, all right, Ajwa, this is the first leg, then is this the second leg? The whole big movement from the sellers is actually the second leg, because the only time buyers actually came after the sellers is right here, when we can actually see a proper separator. So if that is the second leg, then why there is no third leg? So that is why sometimes market may come back to that break of structure, but it will not come in a proper movement the way that we want it to come. Yes, there was a first leg, there was a second leg, which is very big, even that big that it came to the break of market structure in just one go. There was a separator, then sellers tried again. They tried to go lower than the low of second leg, they could not, then they failed and buyers went. So after the buyers went up, that is the reason why it took them forever all this time to make a movement to the upside. I'm going to tell you a little about psychology right now. Imagine that you placed a trade from here. Let's just say you placed a trade from here and you put your take profit right here. You would have to wait for all this drama to happen before market actually went in your favor and trade actually hit your take profit. So imagine holding your trade on the 15-minute time frame for how many days? From 9th of November till 15th of November, all this time, and out of that time, most of the time market stayed in a negative. So you are seeing negative number again and again and again. It would have affected your psychology and you would have closed the trade if you took such trade. I can tell you, if you stay in a drawdown for a very long time, then definitely it affects your psychology. Even though if you know that your strategy is going to work or you have higher probability of that trade going in your favor, but if it is staying in a loss for a longer time and you are seeing the number, the negative number again and again and again, you will end up closing in
a loss, even though after some time it will go in your profit. So that is why it is very important to have or to look for the structure, the one that I am telling you, the one that I showed you. This is also a structure where we came, or the sellers came towards that break of structure area, break of market structure, after buyers made this strong movement. We can even see it on the 1 hour time frame. This was the break of strong structure. Even the resistance is visible previously as well on the 1 hour time frame. Now look at how much time it spent, that even the legs are properly visible, the movements are big on the 1 hour time frame. As that's what I'm saying, we need this type of movements, the pullbacks from the sellers in case of buyers example, or from the buyers in case of sellers example. Now I'm gonna talk about the reversal structure that you need. Always when you're gonna be looking for a trade, you're never gonna be trading without that reversal structure. So far all good. If you're not able to understand the pullback chapter, then go back and watch again the whole pullback chapter. I have added the timestamp so you can easily watch them whenever you want and from wherever you want. Watch this video again and again and again and again and backtest it to understand the concepts that I'm sharing with you. Now how reversal actually works is, let's just say that we have this break of structure. We know that buyers broke the market, and at some point sellers started to make a pullback, and the pullback came in 3 legs and it came near to the break of structure. Now after that, when third leg will finish, I told you the first leg is called confusion, second is called confirmation, and when the activation part will be activated or execution part will be there, which means the third leg. Every single time you're gonna see this, that after third leg came, sellers, they went lower than the low of second leg. Market will just stay a little bit lower than this low of second leg, and right after that there will be a strong buyers movement that will come, and when it will come, it is definitely gonna make a V formation, a V looking market structure, which is a reversal. Now this happens many times. My personal A+ trade setups are always based on this very exact structure that I'm sharing with you. Market is gonna make a third leg, then when sellers will stay lower than the low of second leg, there will be a strong movement from the buyers, which will make a V looking structure. Whenever it is gonna happen, that means reversal has happened. We are all set. The big players, these players who were buying with a lot of momentum, who broke this structure, the strong resistance which kept resisting the market to stay down lower than that price level, that means these buyers, they're gonna come. However, we're gonna be looking for a confirmation. Before we execute the trade, we definitely need a confirmation, and without that confirmation, we are never gonna take the trade. So what is gonna be the confirmation? I will tell you in a bit, but let me first give you one example of the V looking structure, and we have literally just saw the example when we were saying the buyers market where the sellers pullback happened. Now here what you see, the first leg happened, there was a separator, and then second leg tried to came, but it could not go lower than the low of first leg. That means there was no second leg. However, from this price level, when sellers made a movement, we definitely had our second leg. Now this second leg is very stronger than the first leg. That means overall the strength is more than the first leg, as well as the distance that it covered, it is more than the first leg. After that there was a separator, and right after the separator, if you just see from this price level, sellers made a movement, they went lower than the low of second leg. However, they were not really strong as compared to the second leg, because they stopped right after reaching this price level. You know what happened after that? Just see the V formation, the V looking structure. We definitely can see that there was a V looking structure that happened right after we have our third leg, and that third leg movement, it was staying lower than the low of second leg. Now here is the catch. Here when people, they had the confirmation that yeah, we are making lower low lower high sequence, when market made this lower low in the miniature level. If we are just talking about the 15-minute time frame, and most traders who do not know this secret of using higher time frame as a confirmation to confirm whether we are overall in the buyer zone or seller zone, the traders who are watching it as a seller's market, and they're saying yeah, we just broke the structure, and they started to see support turning into resistance. Now think about how many of them, they would have ended up taking sell positions from here, and they started to see this support turning into a resistance, think about how many of them they were taking sell positions from here and they were expecting a new lower low. Yes, the new lower low then happened for sure. Market broke the low of the second leg or the previous lower low, and when this break of market structure happened, think about how many traders who trade the breakouts took the sell position would have placed their stops just at the area from where the sellers movement happened, and they were maybe expecting, let's say, all right, market is gonna go reach this supply or demand zone, or which is a very miniature level of pause here, or maybe market is gonna go all the way down to this resistance area, which was a big resistance. Think about how many of them would have done it. A lot. I can tell you a lot. Now, when they took a sell, I told you the execution. Here is the part, here is the area where they would have gone for sell. And right after that, what buyers did? Buyers who are these big buyers, what they did? They took control. They showed that now we're gonna come back. So when they made a strong movement, they made a V formation. That is a reversal for us. Most of the times it happens at the break of market structure. When it is happening at the break of market structure, I literally increase my risk. I don't trade without confirmation. However, when I have this exact pattern after first, second and third leg, I see that the second leg was way bigger than the first leg, as well as it was stronger than the first leg, and then when third leg came, it was smaller than the second leg as well as weaker than the second leg, and right after that there was a lot of liquidity hunt, liquidity grab, and buyers came back. A lot of stop losses were hunted here. Then I start to wait. I know that this is my favorite pair. I know I can increase my risk, but if there is no confirmation, which is I'm going to tell you how to confirm whether this reversal or a V looking pattern is even real or not. So what I do, I simply look for just one pattern. So right after we have V formation, I know that market, the buyers, they have came at the same level where the sellers made a third leg, from where they started to make a third leg. And right after that, I'm not gonna be blindly taking a sell position from here. You should know that, because for me, it's always best if you buy at the low of V formation or near to the low of V formation in case of buyer's trade. In case of seller's trade, the market structure will look like this. You will have inverse V formation. Then for me, it is always really good if I take a sell position near to the high of a V formation. Now when I take a sell or when I take a buy, what I look for before I take the trade, where I put my stops and also where I put my target, I'm gonna tell you now. So right after the V formation, there is just one thing that I want market to do, and that thing is from here, if sellers will make a movement, now very miniature level of movement, we are not scaling in, we are only looking at what is going on right now, and we are having this struggle from these sellers, which are showing that these buyers that just came, they were very stronger than the sellers that are just coming down. If these sellers are very weaker and they're not able to go lower than the low of V formation, and they start to have some sort of a movement here or some sort of a rejection, then that means I am all set. I'm gonna be taking a trade. I'm gonna be putting my stops lower than the V formation, and I'm gonna be targeting that higher high from where the first leg of pullback started to come. The actual whole pullback started to come. So I'm going to be targeting that area. However, I need this structure. This is must. I cannot trade without confirmation of the V formation. If V formation is real, if this reversal is real, then there needs to be a struggle from the sellers in case if I'm looking to buy, and there needs to be a struggle from the buyers in case if I am looking to sell. If there is a struggle from the sell if I want to buy, or a struggle from the buyers if I want to sell, that means I'm gonna definitely be taking a buy or a sell position. In case of buy, I'm gonna be putting my stops lower than the low of V formation. In case of sell trade, I'm gonna be putting my trade higher than the high of V formation, and I'm gonna be targeting lower low in case of sell example. Now here in this example, what you see that we have this V formation now. Now I'm gonna wait until market comes near to the low of V formation, as well as it comes in a proper struggle. It needs to show me that sellers are very weak. So as you see, definitely look at the buyers movement, and now look at how sellers are coming right after this last buyers movement that just happened after we had our third leg of the pullback. You definitely see a lot of difference here. However, right after we have reached the area, the low of the third leg or the V formation, if we have a rejection here, which we can definitely see, that means I'm going to be taking a buy. We have multiple rejections here. Market is not able to go down. I'm going to put my stops lower than V formation, and I'm going to make sure that I'm going to give it bit of a space, so that way, just in case if there is a seller's movement before buyers, I won't get stopped out. And my target is going to be going at this area from where the pullback started to happen. So this is the whole area. I can see it on 1 hour time frame as well, just at the body of the candle, and this is a very nice 2.39 risk to reward ratio trade right now. So if we just see how it's going to perform, you can definitely see it took some time before market went to the take profit area. Like, it stayed here for some time. However, that is definitely a very beautiful trade. This is the confirmation that I need. So far what we have talked about, I will show you one thing. I will revise it before we start to dive into correlation, which is very important part of our today's video. We talked about market never moves up or down in one direction. It always moves up, then pulls back, moves up, then pull back, then makes a pullback, then moves up, makes a pullback. And it does the same when it is making a sell movement. It is making a lower low, lower high sequence, pulling back all the time whenever it is creating a lower low. So that way there can be a lot more people who can join the sell trend, a lot more people who can join the buy trend. And after that, we talked about market zones, how to identify. We talked about if there is a resistance, that market has been resisting at one area for a long time, then buyers come and break that resistance. That means we are in the buyer zone. Same goes for the sell. If there is a support level and market has been getting rejection at that support level again and again, and then sell come down, break that support level, that means we are in the sell zone. And right after that, we talked about this structure. If you are trading on, let's say, 5-minute time frame, you have to go to 15-minute time frame to confirm if the break of structure was real or not. We will use higher time frame as a confirmation. If you're trading on 15-minute time frame, then 1 hour will be your higher time frame. If you're trading on 1 hour, then 4 hour will be your higher time frame. Now after that, we talked about there needs to be a pullback, always a pullback. I gave you the idea behind how pullback works, the story, the supply and demand, so that way you can understand it better. Then the structure of the pullback. Whenever pullback will come, there needs to be 3 legs. First leg, then there will be a separator, then second leg, which should be bigger than the first leg and as well as stronger than the first leg, then there will be separator, then the third leg needs to come, which should be smaller than the second leg as well as weaker than the second leg. And then after that, we talked about there is going to be a V formation, a reversal, and once the reversal will happen, we will wait for the confirmation from the buyers to show us some weakness, so that way we can take the trade from the high of V formation or near to the high of V formation in case of sellers, or near to the low of V formation in case of buyers. We will put our stops above or below the V formation and our target at the lower low or the high area in case of buyers. Now the next thing that I want to cover now is correlation and how you can use correlation to your advantage. Now the thing here is this trade is on Euro USD, so that means Euro is on the left side and dollar is on the right side. Chart always represents the left side. If this market is going up, that means Euro is gaining strength. If this market is going up, Euro is gaining strength, as well as USD is losing its strength or USD is getting weakness. So Euro is strong, USD is getting weaker. One thing that I want to cover here is market makers, they do not buy or sell one pair. They are always taking positions in the whole currency. They are buying the currency, not a pair. Keep this in mind. Big players of the market, big boys, they either buy or sell a currency, not a pair. So that means if big boys, they want to buy Euro, they're gonna buy Euro across all Euro pairs. If they want to sell USD, they're gonna sell USD across all USD pairs. Now what I have done, I have made a custom layout. I'm gonna show you. You will see that I have given the name USD, Euro, GBP, AUD, CAD, JPY. So all the major currencies: US dollar, GBP or pound, Japanese yen, Canadian dollar, Australian dollar, New Zealand dollar, Swiss franc, as well as Euro. These 8 currencies are the ones that I use all the time. So if I go to USD, it's gonna open up all the charts of USD here. On the very left here, you see Euro US dollar, then British US dollar, then New Zealand US dollar, then Australian US dollar on the very right. I have moved myself so that way you can see Australian dollar US dollar here. Then down you have USD Canadian dollar, USD Swiss franc, USD Japanese yen. Now what these charts represent, that on this one right here in Euro USD, if the market is going up, that means Euro is getting stronger and dollar is getting weaker. On GBP USD, if the market is going up, that means pound is getting stronger, USD is getting weaker. On New Zealand US dollar, if the market is going up, that means New Zealand is getting stronger and USD is getting weaker. On Australian dollar US dollar, if the market is getting stronger or going up, that means Australian dollar is getting stronger and USD is losing its strength or getting weaker. However, it's the inverse when USD is on the left side. If the market is going down, that means USD is getting weaker and Canadian dollar is getting strength. If the market here on USD Swiss franc pair is going down, that means again USD is losing strength and Swiss franc is getting stronger. Then here on USD Japanese yen, USD, if the market is let's say going down on these three candles, that means USD is losing or USD is getting weaker and Japanese yen is getting stronger. Now how to identify actually if the market is really going down or not? Here is the point. The most important thing is you always need to stay on the daily time frame every single time when you do your correlation. Here you see all the pairs are on the daily time frame, and I literally just like to see the very recent movement. What happened in February or what happened in December last year, it does not really matter if I want to trade today. On the daily time frame, I just see, is the market going up? It is going up. Just last like let's say 8-10 candles we can say. Here we can definitely have an idea about the market movement. It is definitely showing that it is going to the upside. So that means Euro is getting stronger and dollar is getting weak. I'm gonna give -1 number to USD. Why -1 number? Because USD here on this pair is getting weaker. Same thing here on GBP USD pair. Here GBP is going up, that means USD is getting weaker, another -1. Then here New Zealand is going up, that means -1 for USD. Australian dollar is going up, -1 for USD. Here last few candles USD is going down, again -1. Now on USD Swiss franc, it looks like overall we are in this zone. However, I talked about the very last candles, like last 8-10 candles we can say. We have definitely a market movement from here to here, which was for the sell side. So we can say -1. And then here on USD Japanese yen, the recent market movement is for the upside. That means for the very first time USD now has +1 number. So what do we say now? So -1 equivalent to -2, then -1, then -1, total -4, -5, -6, then +1. That means -5 is the number. So if -5 is the number, then we're gonna do some analysis here. We have -5. Now very important point, as long as the currency has numbers between -3 to +3, we will always consider that currency in neutral currency. But if we have number from let's say -4, -5, -6, -7, then that means big players, they are really interested in taking sell position on that currency. They want to dump that currency. If we have number +4, +5, +6 or +7, that means big boys, they want to buy that currency. However, between -3 to +3 is neutral number for us. So what we need to do always, all the time, is that we need to always buy when numbers again are between +4 to +7, and we need to sell when numbers are between -4 to -7. Now that means, let's just say if we do the correlation on Euro, and Euro number comes out to be, we can say +4, okay, and we are seeing Euro US dollar chart, and on USD number comes out to be -5. That means it is a strong versus weak pair. So I will write it here for you guys. It will be a strong versus weak pair. If the pair is strong/weak or weak/strong, you will have only a pullback like this. Many times pullback will not even come towards the break of structure, just like the way it did not come towards the break of structure, because Euro will be wanting to go up like it was going up, and USD will be wanting to get weaker. That means on this specific chart, market wants to go up. So whenever we will have strong versus weak or weak versus strong pair, pullback will be very small, and we can definitely expect market to create new higher highs and lower lows if we are trading strong versus weak or weak versus strong pair. But what if you have strong versus neutral or weak versus neutral? That means, let's say that if I will say euro is +4 and USD is -2, then it is a strong versus neutral pair for us. So I will just change that for you. It's a strong versus neutral pair. Then after market will break the structure and it will start to make a pullback, then there is a highly chance, like highly likely, that we're gonna get a pullback towards break of structure, and after that market will go up. However, there will be probably not really a good chance that we will really go up and create a big higher high. So that's for us when we want to trade strong versus neutral pair or weak versus neutral pair in case of sellers. However, I never recommend, I literally say if numbers are between -3 to +3 in both the currencies, then always avoid that pair. Why? Always and always you will find market doing this type of pattern. It will be making no higher high and no lower low. It will be making no higher high and no lower low. And it will always happen. It is gonna consolidate for a very long time before it will even make a movement. Now there is a way that we can trade inside that consolidation movement. We can trade inside that ranging market. However, just for this video, it will be really confusing if I will start to share that strategy as well. So that was the whole strategy that I have been using, and literally I'm telling you, exact strategy that I shared with you has made me over 300,000 overall profits from trading and over 170,000 just with the profit in last 2.5 years. So if you got any value out of this video, let me know in the comment section, and do not forget to join free Discord community that I have started for you guys, where I'm literally giving away all of the information that I have learned over the past 7 years for completely free. And I think that's it from this video. I will put the timestamps in the description, so that way you can simply just move from one chapter to another chapter or one technique to another technique to watch it again and again, and that way you will be able to understand it properly. I hope that I could help you understand this strategy. If you have any question, do not forget to ask me in the comment section, or you can join the Discord community and ask me in the general discussion section as well. Thank you so much for watching, guys. This was the longest video I have ever uploaded on this channel since I started my YouTube journey 3 years ago. And yeah, that's it from this video, guys. Thank you so much for watching. See you in the next video.